Yeah, exactly. And more key today, Kelly, as you know, I just got off the phone with Eric Rosengren, the Boston Fed president. It's his bank that's in charge of this new money market liquidity fund that the Fed launched last night. And he'll be running it when it opens up on Monday. He said his hope is that this fund will restore confidence in the ability of money market funds to provide liquidity that really helps the economy move. The money goes into the money markets, and then they buy corporate paper. They buy all kinds of stuff that businesses need to keep running, as well as securing the investment of individual investors in those money markets. Let me give you some bullet points of what he told me. He said he expects markets to stabilize as a result of all of these things the Fed has done in the next week or two. The money market will backstop the Fed and should address what he calls dysfunction in the markets. And then I asked him what else the Fed could do. He said everything should be on the table. And I asked him about corporate buying and all kinds of things. He said everything should be on the table. Now, I asked him about his forecast for the economy. He said forecasting at this point, not really a great exercise, but here's some of the things he said over the phone about the outlook for the economy and unemployment.
My expectation is that we will see the unemployment rate go up fairly substantially. So I think we're going to see significantly more layoffs over the next week or two.
With substantial problems in different markets, all kinds of credit markets, it's been a very busy day for the Fed. Let me just go through some of the things that they did today. They increased securities purchases. These are outright purchases of mortgage-backed and treasuries by up to $75 billion today from 40, and they opened swap lines with 9 foreign central banks. Kelly, there's a whole bunch of stuff that's not functioning right now, and the Fed is trying, I think, moving at record speed here to try to address those issues, and it's just going to take some time for them to unclog and unstrain these markets at this point.
And Steve, there's been so much creativity lately, not just about the different lending facilities at the Fed, but about the kind of assets they could buy. Yesterday, we heard Julia Coronado suggest maybe they could buy municipal bonds, which are really trading poorly lately because state and local budgets are going to get stressed. Is anything off the table at this point?
Good question. Kelly, it's well to take a step back real quick and talk about the difference between this crisis and the last one. In the last crisis, the Federal Reserve lent to people who were essentially at fault for the problems they were having. The people coming to the Fed now, they're there through no fault of their own. And in this particular instance, the Treasury is providing $10 billion backstops to 3 different funds. What does that mean? It means the Fed is probably, it may already be, but may eventually be, taking way more risk in the economy. Maybe not way more, but more risk in the economy through its lending than it did before. Last time the Fed was like, I'll take the risk, but I am not going to lose money here. You're going to pay me. This time, because they have that Treasury backstop, you could see the Fed be involved in a series of programs here where they take more of the risk to the economy from the virus. This is not yet, but it may well end up being a very different game for the Federal Reserve than it was last time.